Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording on Friday, the 21st of March, at about 2 hours before the close. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. And on today's show, it's slack tide. It compared to the weeks we've had recently, this has been a boring week, but beneath the surface, the tides are shifting and things are changing. Character of the markets being revealed, and we're going to cover all that on today's show and more. Barry, what do you think about the slack tide week?
Well, we survived it.
Yeah,
That's the
it's
important
tough
thing.
trading, man. It was hand-to-hand combat, trying to squeeze out a few points here and there.
Yeah, you got to be quick, and we'll look at the 30-minute chart when we get after we get rolling here.
Well, let's
Um,
dive into the SPX because, as I said, it's been a rather dull week compared to the rest of 2025. But there's a lot of clues being given this week through the price action. Don't you agree?
yes, I do, and we're gonna pick through that
Yeah, let's do it.
as
Let's
we
do it.
go. So for the S&P, I mean, I'm telling you, this is the tightest little grouping I've seen in a long time for an entire week of trading, and it basically happened in an area that we were looking at. I mean, in the cash chart, at least most of the price action was below 56.73. And you can see the candle wicks, we tried to get above a couple of times, but just couldn't do it. And most of it was really essentially under it. So it was in the bracket between, 82 and 73. So the question is, how is this all going to unfold to next week? And we'll try to put the pieces together, as we go. Last week, we left off with this 57.50 being an important level, not to mention the 50% level that ends up being about 57.80. So 57.50 to 80, I put up this little zone. Well, we didn't quite get there, and I think I would feel better if we did get up into that zone, or we were talking about today the possibilities of the S&P doing an ABCD up and correcting that way. If we do that, we should be in the zone or maybe just a little above, peak up there. That would be ideal, but markets rarely do ideal. So we could settle for 57.50. That might be just fine. So my take is, as long as we're above 55.82 for next week, and we're kind of holding the patterns, and we'll look through the 30-minute numbers when we get to that. In the meantime, for next week, I guess the key is really to see if we can, if the cash can settle above 56.73. And if we can, then we can expect possibly a test up around 57.50. So we're looking for the 56.73 to be sort of the balance point. And you can see it's kind of evenly divided. But it doesn't leave out the fact that we might dip down and do a final flush or false break before we move higher. And that'll be clearer in the 30-minute chart. We'll take a look at it when we get there. So that's it for the cash. I don't have a lot to add other than that we have the numbers pretty well bracketed. And let's move on to the other charts, and I think it'll be pretty clear where things are. So here's the Dow. I want to look at this before we get on with the cash with the futures chart.
Some
So
good
the Dow,
information from that chart. Look at that.
yeah. So Dow rallied a little bit. Looks like a little bit of a stronger rally, and we stalled exactly at the 216-degree level, which is a big resistant level for us. So that's be 42,570. And we tapped it. After that, we really couldn't do much right up in that area. Support wise, we took out the 41,348 level, didn't quite get to the 40,000 level, 40,200 or so. Really good support there. And that's what left us, talking about unfinished business last week, last Friday. And it still seems like unfinished business for the Dow anyway. And we'll have to work with that and see. I mean, if we put the square exactly at the high, this will move up just a little bit to maybe 40,430, 3640, 50, right in that area. It still didn't quite get to the square. So we'll have to, we'll watch that. But the key thing is until the Dow really settles above this 42,000, let's say 540, 550, it's still, it's in a weak position with all that overhead sitting on top.
It's like the textbook picture of getting stuck under.
Exactly. Yeah, yeah. And a number of these guys are doing that.
Hmm.
And here's the other one. This is the futures continuation
Hmm.
chart. You can see, here's a sort of the zone that we blocked out last week between 56.82 and 57.50. And you can see that's exactly where we came up and got stuck. So ideally, what should happen is, we could just trade lower since that seems to be good resistance. But we didn't, quite turn around that quickly. We're kind of stuck in that zone. Looks very sticky. And like I said, the 30-minute chart we'll look at in a little bit. We'll probably shed some more light on that. So for next week, I would say, until we get settle above 57.51, same rules, until we settle above that, it's in a weak position. We talked about all this overhead, and we also talked about the overhead that's very clear, above 58.92. So there's a little bit of uphill battle. And I just can't help but think early next week, the market trying to go down a little bit, get everybody, on board for a down leg, and then just snap and run back up to test up in the 57, 51, or go up and get these stops up at the high, because that's the kind of market it's been in, right? And you have to kind of adjust to that till it stops behaving that way.
I mean,
But
it
it
wouldn't
seems
be it wouldn't be out of character to do something like that. No.
not at all. And I think we ought to probably expect some kind of some, I mean, if you get a false break to the downside, and we can look at the 30-minute when we get to that, then we could, probably have some kind of a barn burner up to catch these really quick. And after that, we'll have to figure it out if we can end up above 57.50 or not. But for now, that's a key level to watch. So here's a calendar day chart. Pretty much, 57.50, we're 900 days, degrees, like it's calendar days from the October lows. And, we're right there. Really can't say we went through it. We're just perfectly stalled. And
Yep.
this is why we want to give it time to sort of adjust and set up the next leg.
Hmm.
And here's the June contract. We set up this little zone last Friday. Well, what happened was we spent most of the week in that bracket, in the zone. Uh, so it wasn't weak enough to, sort of get stuck below. It wasn't strong enough to sort of hold above. And it was just enough to be in the zone. So, and that's just what it is, what it was, and not much else to do. Like I said, if it's stuck, markets can certainly go sideways for a few days here and there. I mean, it happened up here in December before
Hmm.
we dropped. It happened here again, another one here. So it happens. We just have to be patient and bide some time. Like I said, I think a false break to the downside and then a snapback would be the one that would, like you say, if you want to think like a criminal and screw everybody, that would probably do it.
Exactly. Yes.
Right, um, now they had plenty of reasons to go lower and go up and meet the 90 level from the December highs. We didn't do that, and so let's see. So that's why I'm thinking that we're going to false break to the downside and maybe try another shot, ABCD or something to the upside before doing anything else. But goes without saying, obviously, if the break to the low, breaking the low is not a false break, meaning we don't snap back immediately, then obviously we're going to go up and meet the 90-degree.
Hmm.
So we have to keep that in mind, and that's 55.13. And that's part of that unfinished business stuff we talked about last week. So it's still unfinished. And our thinking was that we have a pretty robust sort of a bear market rally, like a nice fast rally up, get everybody on board, and then roll over. And it could still happen. So we want to be careful here, not try to be heroes. Yeah, that's the June contract. Let's jump to the 15-minute chart that I was talking about
30 minute,
on,
30 minute.
I'm sorry, this is the 30-minute chart that I
Right.
post on X since the 17th. I mean, that's, we called out this 5684 to be sort of mean reversion point. I am pretty sure it was Monday, if not maybe on Tuesday. Either way, we were just ramping up and down the square. We ran up to 57.75 area, couldn't really hold it. The key here was to be able to hold above this 57.28, broke below. Right here was the key. We couldn't hold above it, and then dropped right back down to this 56.48. These numbers have been on the chart. And back to 56.84, higher low, look, higher low here. Looks like we're going to go if we break it. Got above 57.28, couldn't quite, get above it. Went back to retest 56.84, which was sort of the mean reversion thing we were talking about. Ran back up to 57.75, and that's definitely resistance. Came back down to 57.28, ramped back up, and that was a false break, by the way. Ran back up there, couldn't quite do it. Straight back down to 56.84 again. Now you get the theme of this mean reversion business, right? Higher low, double tap, ran back up again, false break against the prior high. And by that time, I think I even put up a little arrow and said, look, we got the structural resistance up here. And sure enough, that started this entire leg down. First drop, couldn't really get above 57.28 again. Triangle, broke the downside, 56.84, failed the bounce, and boom. And now we're sitting above. So the question is, again, we want to see it, test 56.84 and hold, and then mount some kind of rally if you're going to go higher, which it does. It did it here, did it here, did it here, did it here. So we got plenty of examples, and did it here, but you have to be quick on the draw. It failed at 5,700. So there's a lot of stuff happening all over the chart, but you have to pick and choose your spots. Today, I mean, it's extra weak. I don't know if it's expiration or what, but if we can't, we have to really watch to see if we can hold 56.84. And if we do, we want to make sure that, Sunday night, Monday, that this doesn't go out. If we fail here, then I think we're not going to do this, just perfectly paced testing up the bottom, which is right above this 56.48 level. And I think we might go for, this is where I was talking about a potential false break, right? We could go down and take out this 56.38. And if things really get serious, we could certainly get down and, test this, get it below this 55.76. And the level, 50% level under that would be 55.50, 55.48. Key numbers, right? Where all the options, all the gamma get stuck.
I
So
mean, it's also undisputable that the bounce has been weak.
yeah, it just can't, yeah, weak. And well, they try, right? They try, but then the selling just starts again.
Overtakes them.
So it
Yeah.
overtakes them and just grinds it back down.
Hmm.
So that's kind of what's happened. So I mean, the levels and everything, if you guys are watching on X, I post every day, and Ben post a lot of stuff every day. So you guys can keep up with all the stuff, because once a week is not quite enough. And all right, let's move on to the weekly. So here's a weekly continuation chart that we've been watching. If you've been watching, we got the high. There's no question about that. I even put up this little zone where we should be turning, and we turned exactly on that. Now the question is, are we gonna trade? Where are we gonna, where are the counter trends gonna come? How is this gonna finish? So this week, as you can see, we have a higher high and a higher low compared to last week. And that sets up a really interesting setup for next week, because if we take out this week's low next week, we're setting up for a reversal, and you have to kind of take that into account and play that. On the other hand, if we hold, I mean, at a minimum, hold above the open of the closing bar, that zone in the bar, and start to show some strength, we should probably go higher. So that's kind of what I'm looking at. Do we still have unfinished business? Yeah, I think we do, and not much to do about that till when just be ready when the market's wanting to finish up the cycle. But for now, everything looks okay. This huge ABCD looks like it terminated it. Not to mention all the cycles, the monthlies, the weeklies, and this is sort of the beginning of the results. And I think the weakness that is showing, I wouldn't be surprised if we spend more time below all this overhead than above. Meaning, I'm sort of saying, yeah, I think weaker conditions are coming. But we were saying that back in December, not now. And the reason for being is all the big cycles that expired. If you check our late November, early December episodes, we talked about how these big monthly cycles just can't come and do 2 days down or a couple of weeks down and be finished. They're pretty big corrections, and big is not that. It's bigger than that. Well, maybe like sort of the 22 could be a good example. Something bigger, larger than three or four bar correction. Anyway, that's my thinking, but let's see what happens. And we have to stick by the numbers, and we'll do that and move forward that way. So here's another, that was the cash, and here's the S&P futures. Same thing, we ran up perfectly into a square, and we talked about this 225-degree level, this 57.98 being really important, if we can hold above or not. Clearly we couldn't, drop below, and now, if you guys want a good solid number to look at, 5800, 5802 is a level to watch. That's 225 degrees up from the 2020 COVID lows. So if we can't really settle above that, settling above means like here, this is settling above. If we can't settle above, then eventually we have to look at this 54.42 area, and if that gives out, we have the 50.70 area. This is basis the weekly basis, the continuation chart. But the key to all this is watching this 57.98, let's say.
Mm-hmm.
And the second level to watch on the same chart with 56.72, because once we sort of, if we can't really get above that and can't squeeze in here and consolidate, we're probably going to start slipping. So you want to see, how we start slipping below that. This is a really important level. And you can see it played a little role earlier, back in August of 2024. We sat under that for a while till we broke out. And then we sat above it and moved higher. So 56.72 is also important. And you can see we were just kind of barely struggling to hold above it this week.
Mm-hmm.
Anything you want to add to that? Add to that mix?
I think the key is that 225 degree, 5800 area. If we cannot get above that, it is really weak
Yeah, it's
and
really
really
weak.
vulnerable.
Mm-hmm. I mean, even if we get up into 59.80, this area, we're still having all kinds of technical issues.
Yeah, because
Um,
you'll have a lower high, and that's the key, right?
exactly.
Yeah.
Exactly. So there's a lot going on, and I don't think this is going to be boring trading. And if we can, there'll be enough swings and movement to catch all of that, just like you guys saw
Mm-hmm.
on the 30-minute chart. Even when this tightly packed week, there was enough price action to, get some trading under your belt. So that's it for the ES, and Ben, you're going to cover the NASDAQ, Bitcoin, and a couple other things.
Yes.
I'm going to move on to bonds. And if you guys, also to remind you, if you like our work, please check the like button, subscribe, and also check the alerts and comment. Let us know what you think of our analysis and if we should change up anything. Okay, moving on to bonds. We talked about sort of birds on a wire here and on the 45 last week, and pretty much birds haven't really gone far. Just kind of bouncing on the wire. We did hit the target, 19, 16, 19 and a half up at, when the ABCD finished. And, not a quick, fast correction, but we're definitely consolidating at right on top of a key level. So that makes it easy. So if we ever lose this 16, 12, there's a little bit more downside happening. And if we do that without going back there and double topping or tapping this out, we'll have an ABCD set up to go a little lower. And looks like we're going to consolidate here for a bit. So that's the story for bonds. So watch the 45-degree level, and that's, like I said, 1612. And moving on to the weekly bonds. All right, so the weekly, again, we're tapping up against the 144. We really haven't been able to get above it, and that level happens to be 1920. And we're so I'm considering that to be resistance, which we already talked about. And we also talked about the possibility of consolidating between 14 and this 119 level. So far it's consolidating. We really didn't take the high bar out. We haven't quite taken the low out. We did do a sort of false break, but didn't really recover, which means we're going to consolidate for a bit. A lot of uncertainty in the market. And I would leave it at that. The other square of 9 chart, again, we're in the midst of a couple of different levels. I would say let it battle it out and watch the daily level that we just talked about. If that's held or not. I think that's the big clue. We want to make sure that's held or not, because if we lose that, then we're going to go lower. If we hold it, long as we're bouncing around it, we can just play the bounces. That's my take. Anything you want to add there, Ben?
Like a lot of markets, it
Mm-hmm.
looks like it's waiting for something.
Absolutely. Yeah.
And I mean, this week we all thought, oh, it's going to be FOMC, right? And then we're going to get direction and we're going to go.
Mm-hmm.
But that's not the case.
No, no.
There is something out there that is creating a stalemate, and it's going to get broken one way or another fairly soon.
Yeah, well, maybe April 2nd will do it. We'll see.
It could be. It absolutely could be.
The big T. Let's see
Hmm.
what will
Hmm.
happen there. In the meantime, yeah, well, this is what the bonds are doing, and can't really blame them. All right, looking at crude. I mean, this is sort of like rinse and repeat, pretty much the same story. We're holding at 50% of the square, support area held. So yeah, sure, we can get a bounce off of it, but really not a lot of, I mean, we're range bound here, 65 to 73.50. I don't really see a whole lot of upside that we can get above 73.50. And downside, obviously, we'll have to take these lows out, and then we might have a couple of bucks getting out into the 61 area, which is the big plan. See if that will ever happen. It might not. Either way, not a whole lot to do here. I think there's definitely better movement elsewhere. So, and looking at the weekly, I mean, here's a big circle chart. Yeah, we broke out, so we're going to ignore the circle. But here's that big support line going all the way back to support resistance line going all the way back to 2007. And I mean, super active last 5-6 years, right? Starting around 2018. So this is the line to watch. We're doing this beautiful triangle, and we know when that breaks, it's going to go. And so it's just a matter of waiting. The thinking is that a false break to the downside before we rally doesn't always have to be that way. So let's see. Obviously, it's not time yet. And that's okay. So here's a weekly square, 120-degree square. You can see we're holding above this 50% square, like it's nobody's business doing it.
Hmm.
And here's the other crude chart. So
But we always remember, chaos follows dullness.
yes, yes. So
And
opportunities around the corner.
we've had plenty of dullness, so just be ready.
Yep. It's coming. It's coming. There's no question about that. As long as you're watching it, every week, we're good. Here's the gold chart. Gold, well, finally ran up to 360. Look from the September lows, September, October lows. So it's probably time for a pause. Holding above this 29.52, 29.60 level is going to be positive. I mean, gold's had very, very, other than the triangle, very tight consolidation. So I think we have structural support here. So if we can hold above this 29.50, 2960 would be very positive. Then probably another test of the 360, and that level happens to be 30,000, 30,000, 3,074.
Hmm.
So we'll see. Look, we could bounce up again. The trend is really going to be measured by if we can, how we consolidate here. So I'll leave it at that. And yeah, do you have anything to add? Are you going to cover gold today, right? So we'll get a
No,
little
and
bit more
I'll
detail.
just add to this instead of covering it. It's I had a 135 by 90 square on the daily from the November 14th low.
Okay, right.
Nice square there. And then on the weekly, we did a 360 by 120 from the November 22 low. So there's good
Okay.
squares at that top.
Oh, I see. The 90 up, 90
Yep.
run up. That's a good run. Yep.
Nice run.
Yep. So I mean, this is even more important now, right? So after 90, the quality of the consolidation and sort of the correction is going to be really important to watch here. And if we can do it, above, like, let's say 2990, this thing's in crazy good shape. And even if we come back down to, 2900,
Still good,
2903,
right?
it's still really good. So
Yeah, yeah.
I don't know how you can't lose here. But I think it's good to know the sort of the strength in it. If we can hold above the structural support, if we can hold above, the quarter of the square, they all tell the story of, what to follow. So we'll continue to watch that.
And watch the correction closely because look, I
Yeah,
mean, you can see Barry, the last three or four corrections have basically just been sideways.
yep,
On
yep.
the run up, they're
Hmm.
pretty well sideways consolidations and then they go. So they were
And nice
only,
clean breakouts. Yeah.
yeah, they were nice. They were basically time corrections more than price.
Hmm.
So it'd
Yeah.
be very interesting to see how this one reacts.
Look at this gold at 3,000.
Yeah,
No small, no small deal.
no.
And so here's the other thing is, we actually came and tapped this. We talked about it last week and the weeks before. This is, from the 22 low.
Hmm.
We ran up 50% of the square. That's one of our targets. So 3066 I typed in here last week. And the fact that yeah, I think it's probably time for a break. Again, we can think these things, but really how gold's going to behave is a key here.
And
Um,
again, it may just burn time, like go sideways,
mhm.
chop around, and not pull back much because that's been what it's been doing. So we want to notice if it does something different because that'll give us a changing character sort of clue.
Yeah,
So
for sure.
so
So
we
I
want to
think
watch it.
yeah, you want to definitely watch this because there's 90 expiring, going right into that, 120 level. So I think it's a really important clue.
Hmm.
And the depth of this correction is the thing to watch. Where it might go. I mean, there's a couple of different places we can peg, right? We just talked about them, but we want to watch that. And if we can get down into this 90, I mean, it'll be great because that would give us a little bit more of a run to catch,
Hmm.
see if it's going to go any higher. All right. So let's move on. Let's take a look at silver. Silver did a little bit of a false break right there against the prior high
Yep.
and flipped over. We were up 270 degrees. And silver being silver and coffee does it a little bit too. It'll try to poke, really, really put the pressure on the level. And you can see we really couldn't get a good grip above it. And now we're, correcting. Obviously, this 32.96, 33, and all the way down to 32.90, let's say above 32.90. Silver's in really good shape. I mean, really, really good shape. So, and if we mount some kind of rally off of that, we might be able to go up and put false breaks across the board, because that also looks a little suspicious, the fact that we didn't take this out. So it looks like there's more upside, but we have to mistake it one
It's
week
the
at a
dreaded
time.
double top.
Well, yeah, it looks exactly, and that's why I'm thinking this is going to get blown out somehow. I just can't
Agreed.
imagine a
Agreed.
double top in here working out. So let's see. Looks good. Looks good. Let's move on to copper. Copper is, well, held its own, let's just say. And since we cleared the lower square, the next target is up in say 533. It's really that. Let's see if we can get there.
You know
And
what?
yeah, go ahead.
I was going to say it also did a 90 run. If you go from the same low, like November 14th of 24, you got like a 144 by 90 run.
This low here. Okay.
Yeah. Yep.
Hmm.
So we
Yeah,
got
so
a,
we might also take a break there since all the metals are kind of squaring out and finding resistance, right? And
yeah, I
this
mean,
quarter, yeah, go ahead.
yeah. I was going to say, and gold and it doing it at the same time is interesting to me as well.
Yeah, yeah, pretty much the same pattern.
Hmm.
And but so this quarter square is no joke either. So let's watch that, and that's around 510, and we want to see, if price can settle above or not. I mean, that'll also show us some, you know, that'll be a clue towards the internal strength here.
Put your 90 square on that November low and you'll see it.
Hmm.
It's remarkable. It's the same run that gold did.
Hmm.
And it's doing a double top just like silver did to even add more intrigue.
Hmm. So there it is. Yeah.
Yeah,
Just like silver didn't quite take it out,
didn't quite.
but we do have the 90. It's a beautiful 90 running up into it.
Hmm.
Um, yeah, let's see. And that being the case, I think this $5 range, 495 to 5, if we hold above that, wow, it's very strong. Metals are still strong.
Right,
And
but
I
I
think
mean, you
that's
could
going to be the
say
clue. Yeah.
this is
Hmm.
one of those examples. Oh, it was a boring week. Nothing really did anything. Wasn't a lot. But look at the clues beneath the surface, right?
Yeah,
This is a big deal for gold and big deal for copper.
that's true. That's true. I mean, if it's nothing dramatic is happening on the surface, there's a lot of, breadcrumb trails laid for the coming time, right? Coming period. So it's
Absolutely.
mhm. Yeah, let's take a look at that. What else? We also I see like a little ABCD here. I wasn't really watching it
Hmm.
closely. Let's see what happens. I mean, that'd be a little bit too much. Too well, just a little hair, a little bit more to go, right? If we can get up in there. And that's about 5:30. Who knows? Maybe, maybe not. But ABCD's finishing up 90s is like something to behold. But there's an ABC that finished up. I think that's the one that did it. So I'll leave it there. We'll see what happens. Well, let's look at the copper weekly. Copper weekly, we're heading towards, looks like we want to go up and test the 216, which is around 535, 536. So that's a possibility. Support, we have 480 written here. Long as the weekly is above 480, it's in great shape and can go up and tap this 536 level anytime. So that's copper. I don't have anything much more to add. Let's move on to the dollar. Well, we're waiting for the dollar to come up and touch the 60-degree level. And, if that were the case, we're looking for the sort of the range to continue. But if we did have a kind of range breakout, not a huge breakout, I'm talking about the range that we've had for the last couple of years. So, if the correction is going to hold a little bit higher than the square level, I think that just lends to the dollar strength. That's kind of in there. And I was looking at potential ABCD that finished up from the high, and that goes right into pretty much where we stalled. So I'm
That's a
thinking, what's that?
that's a good one.
I would say it's good enough, right? So when I see that, I also want to sort of confirm to see, okay, we have an ABCD. What else are we possibly looking at? So if you take it from the low back in September, we have 120 days low to low, and we are pretty much 3/8 is a level that it found support, which is a decent, it's not a pushover level. So that support is there. Then I went to the high back in 22 just to get an idea, to get the scope of how the dollar is doing. And from there, you can see we came, not the top square, but 50% of the second square. And we held it here. So that square has been fairly active. I mean, throughout the whole last couple of years. You can see, in 23 what happened around that area. A lot of contact here. We had a good sell. I remember that one in 24. So we're back. Here's a check back before we took off in 24. So here we're back, sort of testing it. We did break a little lower than the 24 low on the same line. So the exact level of the 50% square would be 103.5. And so I think between the counts, we might have enough to go on 50% and that 120 low to low and the 3/8 off the low, right? I think it's probably enough. So the proof is in the pudding, as they say. Let's see how we handle the rest of it. Now, the fact that we went sideways here, 104 level would be the highs. And if we can get above and hold above that level roughly, I think, we might be ready to start moving again. So that's sort of my take on the dollar. So weekly, pretty much like we talked about last week, the trend lines held, and sure, we could go a little lower to confirm the 50% of the square. But if the lines hold and the support is there and the market's strong, we don't have to pull back that far. We don't need deep pullbacks. So it looks like we're kind of holding it for now. Let's watch it. We did make a higher high. But I think dollar being the dollar, might be better off watching the daily than the weekly for now. Let's move on to the euro. Euro, well, the time count worked out, 45 days up, pretty much rang the bell. And at 109, let's say 09 400 was the high. And the 108.45 is sort of the boundary, and we've been sort of nicely packed in there in that zone so far. I think the key here is to see if we can hold above or if we can sort of, slip off of that. If we slip, then there's no question we're going to come back and test this 106. So there's a little bit of downside to be played here. Let's see how it works out. The 45-day run up, I think it's a pretty good termination point most of the time. If you take a look at other markets, what we haven't had is a lower high. So it's possible we go down a few, come up a couple of days and see how that sets up. But for now, looks like the high is in place, and we're trying to see what kind of a correction we're going to get off of that. And maybe with the dollar chart that you're going to show, we might have something to work with.
Agreed.
All right. So here's a weekly, pretty much the same case. This is a good check back level. 108 obviously is the big level. Let's see if we can hold above or not. I would even give it a little bit of space, but we're kind of barely holding. I think once we take out 108, it could start to slip. And anyway, let's watch it. For now, it came up to we saw the time count, so we did terminate that run here from the low, 45-day run.
Mm-hmm.
We'll see how that works out. For now, that's enough. We know the direction, we know the prices, the bracket there. Natural gas, well, kind of back in filling, not much. We'll wait.
We have to wait. Yeah.
We have to wait. And just burning some time. Hang Seng is doing okay. We went up and made a false break high this week over the last week's high. And, we had a quick reversal. So this, that's an indication of a false break, right? Fast moving the opposite direction. And we took out the 240.86. So I'm guessing now, after the nice run we've had, 36, about a 45-day run. I think we're ready for some kind of a correction. So let it finish up and we can pick it up.
And you got a tight 3 drives there too.
Yeah, you're right. Tight, yeah, pretty good 3 drives, 45-day run up. I think that's enough.
Mm-hmm.
That's
Time
enough
for a
to say,
pause.
yeah, time for a pause. Let it back and fill, and it has a great level. This 22 710 or 709 is a great level. So long as we're holding whatever business above that, I mean, ideally like an ABCD down into that would be perfect. But as long as we're above that, this thing's just blistering hot. So let's see how that works out. Well, that's all I got. Let me put it back to you and continue with the NASDAQ, Bitcoin, and the other things you got.
Excellent.
All right. Can't get above that rebel. What line is that? The
19,925,
no, the
right there.
20,085,
Oh, that was one of the
the balance
harmonic
point,
harmonic
harmonic
balance
levels, right?
points. Yeah.
Okay. So we're just hanging right under that. Can't quite get
I,
above it.
I mean, you
Hmm.
can see both in bonds, in ES, in the S&P 500 and the NQs here, we're banging up against levels that,
Hmm.
after, if you look here, after we came down, we had no problem getting through the 135.
Hmm.
Went
Right.
straight up to it, tapped the 180, came back, checked, and then went. So
Right.
the difference and the change in character is like, well, look, since the top. We got
Hmm.
below this level, tested it from below, couldn't get above. Got below this level, tested it again, couldn't get above. And the same thing's happening.
Right.
So does it mean that the correction is, the counter trend is over? No, it's something to notice because this is a definite change in character from sort of this behavior after big down, this behavior
Hmm.
after big down. Things have changed and we just have to recognize that. I do think, as you were saying, that, somehow we're going to get above, maybe fake a move down and then get above to push up a little more, and
Hmm.
test up in here. But this is a sign of weakness, right? Of sellers still being around even after this move down. So we just have to notice that. And
Hmm.
obviously the key level is going to remains this 19,925. If we can get on top of that and sit on top of that, we can go up and test, 20,600. But if we just continue to chop around here and basically burn off time, it would portend, much more weakness coming. So we have to watch that. Let's take a look at the weekly. You can see weekly, we just have an inside bar. Maybe
Hmm.
we got, I don't know, maybe did we poke ahead for a little higher high or this week? I'm not sure. Let me see. I thought it was inside, but let's look. Nope, we did not get higher high. So we're inside this week. Again, after this, what do we have? One, two, three sharp weeks down. All we could do is an inside bar. So we'll watch next week to see if we can get an up bar, get a higher high than this week and a higher high than we had last week. Because we want to see, if this correction, if we do get some upward momentum going, what's it going to do at 21,000? But
Hmm.
as you can see on the daily, first we got to deal with these levels before we even talk about 21,000. Let's jump over on the monthly. Monthly's the same story. This month of March looks like we're going to be stuck under. So that's really important because it means that while we're below 21,100, the gravity and the magnet is the 18,200 area. So all in all, it's a picture of a muted bounce and weakness. Let's check the calendar day as well, so you can see that one. See here, we had support here, but again, the bounce is pretty muted. We haven't even gone up to test the half square here at 20,600. And it's been what, a week and a half since we made these lows.
Yep. Yep.
I don't know, Barry. I see a very weak bounce, and I'm
Hmm.
not trying to read too much into it, but I've always looked for what's the character of the market, and we definitely have a change. I mean, what are you seeing here in NQs?
Well, absolutely. I mean, we had a change starting a couple of weeks ago,
Hmm.
and it's just continuing. Yeah, I think not to read too much, but yeah, that's kind of a weak correction. Could mean a few things. So that's why I want to, it'd be good to see how this unfolds from here, this little cluster, because it is kind of range bound. So we want to see if we can break above that cluster or just kind of fold under it.
Yeah, and again, the range is coming because it's always that perspective you always say we have to have, which is where are you? How did you get here?
Mm-hmm.
And we
Mm-hmm.
got to this spot after a sharp down move.
Right.
And so, consolidating here, think of it as sort of the inverse of what gold was doing on the way up, right? It was making these
Mm-hmm.
sharp moves up, then having, minor pullbacks, just consolidations in times, and then it would resume. Are these risk markets doing something similar? Well, we're going to find out, you
Yeah.
know, and we're looking for clues, to help us, you know, assess the odds of what's going to happen better. But this is it's glaring weakness is what I've noticed and what I'm
Well, your
sort of
270-degree level is a key level to watch for longer
huge.
term. No, that's that 19,176. Might as well make it 180. That
Yeah,
level. If we can, it's really the playoff of that because you did run down one full square. So how do we
right.
do from here, right? And like I said, ABCD up into that 50% area would be beautiful. Almost too easy.
I mean, yeah, that's what I'm hoping we get is something like
Hmm.
that, right? Because you
Yep.
have not only the half square, you got all this overhead here that you could sit
Hmm.
under.
Yep.
So we'll see. We'll see how it plays
Hmm.
out. We're not
Hmm.
predicting. We're just noticing and then assessing odds.
Hmm.
Let's jump over to Bitcoin, another one that's struggling here.
Yeah. What happened to all that to 500,000 talk?
Let's see, right? Let's see what that's going to do. I mean, it's religion, but
Hmm.
let's see how this goes. I mean, the obvious thing is, every time we've gotten stuck under a level, we've sort of stair stepped down.
Hmm.
And this level, the level now, for a while it was this, 96 was the key level. I remember talking about in here. There's 96.6. This is going to be the decider. This is going to be the decider. And
Hmm.
for several weeks we crisscrossed it, and then we got stuck under and went. Now it's 85,000, 300 roughly, call it. This is the level now. If we get stuck below this level, then 79,000's in play. The recent lows are in play, and we're
Hmm.
probably going to go down and check, these highs here, around 73,000.
Hmm.
Or if it's like something else where it moves more than more than you always think, maybe we go down into the 60s, right? And it races
Right.
through this just to scare people. But for now, it's 80,000, 85,300 is the key area to watch. We want to watch this level, get above it, then we can get a little more of a counter trend rally going. If we get stuck under it, as I said, then it's showing much more weakness. It's
Hmm.
not it's not dissimilar to the NQs if you look at it, right? Came
Not
down,
really. Exactly. Yeah.
muted bounce, and having trouble with the first level. So let's watch it and know the level, 85,280. We can get above that daily basis, then we got some room to run.
Hmm.
Let's check the weekly.
Ooh,
Weekly 89.5 is the key here,
we're a long way from that.
and we're a long way. Yeah,
Mm.
yeah. So let's see. Let's see if we can push up there. We do have an up bar this week, so this is the first up bar in a while. So let's see what next week brings. But on weekly basis, 89,500 is the key.
Hmm.
And on the monthly, you can see we're right in the middle of this big square here. So
Right.
let's watch and
Hmm.
see how it acts. But until you start at the lower time frames and say, okay, you got to recapture the level here first, the 85 280, before
Hmm.
you worry about the higher levels on the bigger time frames. So until we're above 85 280, I think you just got to be suspect short term of Bitcoin. Anything to add here on Bitcoin?
No, that was good coverage. I think we're on track.
After the normal rotation, Barry, I don't have anything on the commodity side. I mean,
Hmm.
I can quickly run down. Wheat is sideways. Corn is pulling back. Soybeans pulling back. Sugar is chopping in a triangle. Cotton continues to be sideways. Cocoa is finishing up like a first big wave down.
Hmm.
Coffee is the one short that we had set up where It's kind of triangulating right now, so I'm
Right.
waiting to get a clue there, and then I'll bring it back up in terms of
Hmm.
looking to the short side. It's still looking bearish, but if you're playing options or something with time, you can't mess around when it starts triangulating.
Exactly.
Gold, silver, and copper we talked about. Crude you talked about is sideways, and nat gas is correcting. So what I wanted to do was show this chart as something different, and also look at the yen, dollar yen, because I
Hmm.
know a lot of people are looking at that. So this is a an ES, which is the S&P futures calendar day chart. And I thought it was interesting because look at the current moment where we are.
Hmm.
We came down. This is 270. So this is a
Hmm.
similar vibration to the one you have set, but this is a calendar day.
Right.
And and we got down through it, and now we're coming back, and we've been banging up against it all week.
Hmm.
And this 57.43, could be 57.50. It's in that same area. I think 57.51 was one of your big areas. So
Hmm.
in that area, you can see there's both time and price right now.
Hmm.
So either we're going to turn tail and go down, or I think next week we're going to go over it. I don't think we're going to continue to bang under this for another week because I think this sort of cycle here that expired is saying, okay, put up or shut up time, right? Either get through and go, or you're going back down again. But I like looking at this chart because I mean you can see the overhead resistance that we're running into. You obviously have the 270, and then we've got the timing here as well. So it's a pretty cool looking chart, and that's 900 on timing there, by the way.
Hmm. Yeah.
Any comments here on this calendar chart?
Well, it looks good. I think I had a cash chart with a very similar setup,
Yeah,
and it's the same index. So yeah,
yeah,
I think you're absolutely right. Either we have to take out the high or take out the low,
yeah.
or like we were talking about earlier at the beginning of the show. I mean, to screw everyone, maybe false break
They
to the
do
downside.
both.
Yeah, do both, and so we have to be ready. And I think we'll be in that kind of a mood next week. So.
All right, let's
But now
end
at
on.
least we know that 47, 43. At least we know the levels to watch, without
Yeah.
knowing it's even a bigger headache.
Oh my God, it would be like shooting blind, basically.
Yeah. And your
Let's
three
let's
eighths level on that chart looks really solid too.
Yeah, you like that one?
Yeah, yeah. So it's really good.
So let's look at the dollar yen.
Hmm.
Dollar yen, as everybody knows, or if you might not know, is the one of these international funding currencies. So it directly
Hmm.
affects all kinds of markets because people borrow in yen or have borrowed in yen for years to invest in other things.
Hmm.
So I went back, and Barry and I were talking. He said, "Why don't you do the dollar yen?" I said, "All right, let me work it up and see what it looks like." And I think I have some decent charts with good vibrations here.
Hmm.
This high here, I didn't realize it, but we made a pretty significant high last July. Like it's the highest number in the yen that I saw in my data.
Right.
So it's a pretty significant high. So I said, all right, let's set a vibration from there and see what we get and see where it's important. This chart, it catches price decently, but I thought it did a decent job of catching timing too.
Time.
Like,
Yeah, yeah. Hmm.
like here, at the
Hmm.
first 30 was good. Second 30 wasn't bad. Here wasn't bad on the half cycle. And
Hmm.
here we just hit another one, right? At this point. So the key level to me in this chart right now, there's two, 147 on the downside, right? If we
Hmm.
get stuck below that, that's the 60. If we get stuck below 147, that means the yen's going to get a lot stronger. And on
Hmm.
the upside, it's going to be this half square here around 150.80. If we get above that, maybe we could rally back up all the way up to here, like 154, 155 area.
Hmm.
And that's the daily. But this top, when you see when we go to the weekly and the monthly, you'll see it's a pretty big top, right? And we've already got one lower high off of it. So we have to really watch this to see, was this a major turn in the yen and in terms of strength of the yen and weakness of the dollar.
Hmm.
Let's look at the weekly. So there's the weekly. And on the weekly, I set it at the COVID low,
Hmm.
and I'm running a 45 here. And look at the timing on this one, Barry. Every 45, we're getting something, right?
Something. Yeah. Yeah.
45, 45, 45,
Hmm.
45, 45. And the next 45's coming up would be in May, like first week of May, second week of May. And you can see where the support where we came in, where we were talking about on the other one, 147. This one's 146 and a half. You lose 146 and a half and get stuck under, that's pretty big
Hmm.
because it could be first wave down, second wave back. It could be the third
Third. Right. Right.
that's
Makes
taken
sense.
off.
Hmm.
So I like this one from the timing as well, and it's got priced pretty well as well. On a weekly basis, it's done
Hmm.
price pretty nicely. Anything you see on this weekly that jumps out to you?
Well, I think your call is good with the time counts. And if we lose that 147 area, yeah, I think that's going to
It's
be in
pretty
big
big.
trouble.
Yeah, I
146,
mean,
147 area.
because let's say it's not a big monster three, but let's say it's just an ABCD, it's still going to be pretty damn big.
Hmm.
I
Yeah,
mean, yeah,
get us
that's
down to the
going to
50% level, which makes sense.
almost about 136. 136 would be the next shot. Anyway,
Looks
that's
good.
that's
Looks good.
that's the weekly.
It's a worthwhile trade because, when the yen gets going, it just goes. So,
Yeah. Yeah. And the reason why we were talking about showing the yen is it affects a lot of things. A
mhm,
lot of different, you say, well, I'm not interested in currencies. I don't really trade currencies. But this thing drastically affects risk and bonds and all kinds of investments.
mhm.
Again, because of it being a funding currency. Here's your monthly. And see what I mean about pretty significant high?
Yeah.
I mean, this is going back to like 92, and that's the highest high that I have in my data. So it's no joke.
No.
And again, this level 147.60. So we have 146 and a half, 147, 147 and a half. That area is really, really important. If we
Mhm.
can hold above it, theoretically the yen can recover. I mean, the dollar can recover against the yen, right? The dollar will get stronger or maintain
Mhm.
its value. If we lose that level, the yen's going to get a lot stronger versus the dollar.
Right.
And we're seeing that on a weekly, on a monthly, and a daily basis.
Mhm.
And when all those, I know you, if you've watched the shows long enough, when those all three of those time frames line up, you really got to
Mhm.
pay attention because you can get some pretty big moves.
Right.
Anything else you want to comment on the yen?
It looks good, and I think it's timely. We have a high and we have a lower high in place at the monthly level, which I think is a big deal. And we have two bars down coming off the lower high. And you know what they say, if we get another month down, we could end up with a downtrend. So,
That's right.
I think it's time to really watch it closely. But this might be a clue towards what's coming.
Yeah, and it'll tell us, because there is a big sort of two-sided argument for the dollar, right? Some people say, oh, the dollar's going to get really weak or the dollar's going to get really strong because capital's going to come back here and people are
Hmm.
going to want to go to the strong, sort of safe place. Others say, well, people are sick of the dollar, so it's going away. Here, you don't have to worry about the narrative. We look at the price, right?
Exactly. Yeah.
Below this 146, 147 area, the dollar's going to be a lot weaker versus the yen. Above
Hmm.
it, it theoretically it's going to be stronger.
Hmm.
And that's one way in which we, try and be aware of the narrative, but not have it drive our process or drive our
Yeah.
decision making.
Hmm.
And we've talked about that for a few weeks.
Yep.
Um, this week, Barry, I don't have a great topic, so I wanted to ask you, what do you think is top of mind right now? Like what are you focusing on?
Well, my one of the ongoing themes around here
Hmm.
is really about trade management. It's
Hmm.
always where it ends up. Entries, sure, I mean, you can flip a coin and jump into the market. So I think entries are easy, and we know levels, we have times and all of that. But the sticky point is always, and where we can always grow, and where all the psychological, all the shadows and the demons sort of hang around is in trade management. So, and I really don't have any kind of an answer to that, but I'm just bringing up a topic because
Hmm.
everybody will have a sort of their own unique way of managing it because of the type of trades they do or what they're trading, and the size and everything matters, right? All the different everything kind of adds into the formula. And I always think it's such an interesting topic because a lot of the talks about, the one that got away, well, he got away because I got out too early. I got in too late. All the
Right, right.
great trading stories are all about management. It's never about, oh, I missed the entry. So anyway, it's a topic that's always on top of my mind, and
And,
more than, entries and exits.
well,
That's
isn't that more the art of trading, right? Because you do have a mechanical aspect to entries and setups, but
hmm
but then the exit is kind of it has an aspect of feel to it, doesn't it?
It does, because that's where the fear and greed comes in, right? Because at the
Yeah.
entry, you're kind of neutral. You didn't make anything, you didn't lose anything. Sure, there's a potential, but you can manage your risk. You can only lose X amount. But then, well, fear and greed plays out on the management, and it's really a matter of not having it affect you, and try to lean on the technicals as much as you can, and try to make that also some kind of mechanical process. But it's not that easy. Yeah, I mean, you can make it a mechanical process, but then you're always losing out on one end. It's never a perfect product. So,
And that's the key, right? Is not to beat yourself up, is you just try and you I guess you and I have had this discussion before, is you don't grade yourself on did I get every last bit of it, right? Did I buy the low and sell the high? That's not how you grade yourself. You're like,
hmm
did I manage risk properly? Did I take my profits at a level that made sense? Like, did I take, if I'm short, did I take my profits at support? If I'm
hmm
long, did I sell at resistance? Those are examples. I mean, do you have any other examples that people could use so that it's not this, strive for perfection that you can never achieve in the markets?
Well, I can't think, but I'd love to hear from people watching, because a lot of these people are traders, or individual independent traders. So we have to grapple with our own demons and figure out our own ways, and you can't just duplicate or copy or clone somebody else's way of managing money, because just because, like I said, all the different variables that are in place. But I think it's worthwhile talking, because at least it'll get everybody thinking in their own way and say, well, how can I manage this better? Obviously you want to cover your risk. And then it's almost like, they say, getting to know yourself. You have to really get to know your system, and the time frame. So, when you get in, for that day, depending on the pattern, depending on the character, what's reasonable to expect, right?
Hmm.
And try to manage to get there or thereabouts, and then the magic ingredient is just to leave a runner in there, like we always talk about, and lock that in at break even and make it a free trade and hope for the best. You know.
I
Um,
think I think the thing you said that makes the most sense to me, because I've
mhm,
experienced myself, is it's that once you're in the trade, it's the battle between fear and greed
mm,
inside of you.
yes. Yeah.
It's not the market anymore. It's how do you handle those two opposing emotions that come into play every time you have a trade on.
Absolutely. And this is what, Mark Douglas talks about this a lot, in terms of, how do you handle that? If you've had trading trauma, getting
Right?
started and learning, well, all that's going to show up and say, oh my God, you better take this profit. It's not going to go there again. And obviously, if you act emotionally and take it too soon, then the market takes off. It's like, oh my God, I could have made, 5 times as much, but I didn't. It's just an ongoing battle. But I mean, I don't know. I'm still thinking like I mean, the best option to sort of break even, go down the middle path, let's say, is to have a mechanical uh, exit right away to cover your risk,
Hmm.
and then sort of take over, and then be creative in how you manage the rest of it. That way, no matter what happens, you at least get your risk covered and maybe a little bit more. But that puts people in a whole other category of issues, because then it gets into position sizing, because the
Right?
larger the position, the easier it is to manage these things. And the smaller the position, I mean, it's impossible to do 3 to 5. It's very, very hard. You can still do it, but 3 to 5 of anything, if you try to peel those off, it's very difficult compared to, let's say, 100 units or 1,000 units, right?
Sure.
So that's what I mean. I think it's such an interesting area because everybody's on their own. They have their own psychology, but everybody's battling the same market, but they all have different expectations and things that you bring to it.
Well, I think we'll end this week and end this subject with this summary.
Hmm.
I hope people are hearing that trade management is really management of yourself
Mm.
and management of your emotions. What Barry said is true. It's different for everybody because we're all different,
Hmm.
right? We react differently to those feelings of greed and fear, and it's figuring out how do you manage those emotions in yourself to maximize your risk reward in your trade.
That's a great summary. You're our AI summarizer.
There we go. Well, listen, a great show, Barry. Listen,
Mhm.
everybody, we appreciate your support. Please, subscribe, like, and as he said, comment because that YouTube when you guys do that, YouTube disseminates the video more and gets more exposure. And again, we'd like to grow the channel again this year, like we did last year. So we appreciate your support, and we'll talk to you next week. Good job, Barry. We'll talk next week.
Good job, Ben. Thanks. And also, we'd like to hear, speaking of comments, if you guys want to talk about your trade management stories and or nightmares and wins and loses and what works and the process you've gone through, it'd be great to have it in the comments. And, if you have a good story, we can talk about it. We can take each one of them and get into it maybe end of the show next week. So something we can do. In the meantime, have a great weekend, because next week, we say this every week, but next week's going to be extra special. So let's
Especially since it was relatively
exact
slow this week.
exactly. All right. Have a great weekend.
Take care, everybody.
Bye bye.
Bye bye.